Hello and welcome to Calling Monster Finance. It's September 18th, 2025. Today, the U.S. markets delivered a powerful session defined by a clear divergence in catalysts. While the Federal Reserve finally delivered its first interest rate cut of the year, the market's attention was captured by a landmark strategic alliance in the technology sector. This created a dynamic where a long-awaited monetary policy shift was almost entirely overshadowed by a single transformative corporate deal. The result was a strong tech-led rally that pushed key indices to new highs, even as underlying economic signals remained mixed. Coming up, we'll break down the muted reaction to the Fed's decision, analyze the explosive impact of the NVIDIA-Intel partnership, and examine commentary from key figures impacting the market landscape.
The main storyline for today's trading was a tale of two powerful yet fundamentally different events. On one hand, we had a meticulously telegraphed policy pivot from the Federal Reserve. On the other, a stunning, out-of-the-blue announcement of a $5 billion investment by artificial intelligence leader NVIDIA into chip pioneer Intel. The market's reaction provided a definitive verdict on what truly drives investor sentiment in the current environment. The initial response to the Federal Reserve's rate cut was lukewarm at best. Major indices traded mixed in the immediate aftermath, as investors digested a policy move that was presented less as the start of a sustained easing cycle and more as a reluctant concession to weakening economic data. But the day's true catalyst, the event that ignited the market, arrived not from Washington, D.C., but from Silicon Valley. The NVIDIA-Intel announcement was a thunderclap, instantly reframing the narrative from macroeconomic anxiety to microeconomic opportunity. The deal sent Intel's stocks soaring and triggered a broad, euphoric rally across the entire semiconductor ecosystem. This enthusiasm was powerful enough to lift the wider market, with the S&P 500 closing up 0.48% to finish at 6,631.96, and the tech-heavy Nasdaq Composite gaining 0.94% to close at a new all-time high of 22,470.72. Ultimately, today will be remembered not for the Fed's predictable policy adjustment, but for the audacious corporate maneuver that promises to reshape the future of the AI arms race. Let's take a deeper look at the two primary drivers of today's session. First, the Federal Reserve. After 9 months of holding rates steady, the FOMC delivered its first interest rate reduction of 2025, lowering the federal funds rate by 25 basis points. The stated justification was growing concern over the U.S. labor market. However, Chairman Jerome Powell's press conference shaped the market's cautious reception. He delivered what is being called a hawkish cut, stating the move was not necessarily the beginning of a long monetary policy easing cycle.
The market's interpretation was immediately validated by the bond and currency markets. The 10-year Treasury yield, which typically falls on easier policy news, actually rose, finishing the day up at 4.1%. Concurrently, the U.S. dollar index strengthened by 0.52% to 97.37. These data points confirm that investors focused on the Fed's cautious rhetoric, pricing in a higher-for-longer interest rate environment than the cut alone would suggest. The second, and more impactful driver, was the corporate bombshell from Silicon Valley. NVIDIA announced a historic collaboration with its rival Intel, backed by a massive $5 billion strategic investment. The partnership will see Intel build custom CPUs for NVIDIA's data center platforms and new chips integrating NVIDIA's GPU technology for the PC market. The market's reaction was immediate and explosive. The vote of confidence from the leader in AI was seen as a game-changing lifeline for Intel. This single corporate action completely rewrote the day's narrative. Data shows Intel stocks surged an incredible 22.77%. The deal's architect, NVIDIA, also rallied, gaining 3.49%. Conversely, chief rival Advanced Micro Devices felt the competitive pressure, with its shares falling 0.78%. This was the sole driver of the market's strong close. Adding to the day's complex backdrop was significant activity from key political and corporate figures. The Trump administration escalated its pressure on the nation's independent economic institutions. An emergency request was filed with the Supreme Court seeking the removal of Federal Reserve Governor Lisa Cook, a move that challenges the long-held principle of central bank independence. This pressure was also reflected inside the FOMC meeting, where the administration's recent appointee was the lone dissenter, advocating for a larger 50 basis point cut. In a parallel move, President Trump renewed his proposal to eliminate mandatory quarterly corporate earnings reports in favor of a semi-annual cycle. On this particular day, the market chose to look past these institutional risks, with the tech-heavy Nasdaq's 0.94% gain demonstrating a strong risk-on sentiment focused squarely on the NVIDIA Intel deal. Meanwhile, Tesla CEO Elon Musk took to his social media platform, X, to personally manage a narrative affecting his company. Responding to viral reports of a major deal to deploy 10,000 of the company's Optimus humanoid robots, Musk posted a one-word reply: fake. Despite the CEO's direct intervention to quash a speculative rumor, Tesla's stock was part of a broader negative trend for the day. The shares closed down 2.12% at a price of $416.85, suggesting that other selling pressures overcame the CEO's real-time commentary during the session. Beneath the headline, "Numbers of the Major Indices," a clear structural divergence was at play, driven almost entirely by the day's big tech news. The standout performer was, unsurprisingly, the information technology sector. Fueled by the semiconductor rally, the S&P 500 information technology sector was the day's best performer, gaining 1.36%. This highlights how the enthusiasm for the NVIDIA-Intel partnership cascaded across the entire tech ecosystem. The industrial sector also posted a solid performance, closing up 1.06%. On the other side of the ledger, more defensive and consumer-focused sectors faced headwinds. The S&P 500 consumer staples sector was the worst performer, falling 1.03%. The consumer discretionary sector also finished in negative territory, down 0.51%. This divergence paints a clear picture. Today was not a broad, all-encompassing rally. Instead, it was a targeted surge, with capital flowing decisively into the technology sector on the promise of innovation and strategic realignment, while other parts of the market lagged behind. Now, let's recap the closing numbers for today's session. For the major U.S. indices, the Dow Jones Industrial Average rose 124.1 points, or 0.27%, to close at 46,142.42. The S&P 500 index added 31.61 points, a gain of 0.48%, finishing at 6,631.96. The Nasdaq Composite was up 209.39 points, or 0.94%, closing at 22,470.72. And the Russell 2000 index saw a strong gain of 2.51%, adding 60.36 points to end at 2,467.70. Turning to key indicators, the CBOE Volatility Index was nearly flat, down just 0.13% at 15.7. The U.S. dollar index strengthened, rising 0.52% to 97.37. In currency markets, the U.S. dollar gained 0.68% against the Japanese yen, trading at 147.89. The yield on the 10-year Treasury note rose to 4.1%. In commodities, crude oil fell 0.64% to $63.64 a barrel. Brent crude was also down, losing 0.65% to settle at $67.51. Gold prices declined 1.07%, closing at $3,678.20 an ounce. And in the crypto space, Bitcoin saw a gain of 1.56%, trading at $117,420.02. Now for the day's most active stocks by trading turnover. The top 5 were: first, the S&P 500 Index ETF, SPDR, which gained 0.47%. Second was Tesla, which fell 2.12%. Third, the NASDAQ 100 ETF, Invesco QQQ Trust, up 0.90%. Fourth was NVIDIA, which rallied 3.49%. And fifth was Intel, which surged an impressive 22.77%. In summary, today's session was a clear demonstration of the market's current priorities. A landmark strategic alliance in the semiconductor industry completely eclipsed a long-awaited Federal Reserve rate cut, proving that transformative corporate news is, for now, a more potent catalyst than incremental monetary policy. This was confirmed by the data, with Intel's explosive stock surge fueling a rally in the NASDAQ, while the Fed's hawkish cut was met with a counterintuitive rise in Treasury yields. Looking ahead, the key variable will be whether the euphoria from the NVIDIA-Intel deal can sustain broad market momentum, or if the significant political risks highlighted by the administration's actions against the Federal Reserve will begin to weigh on investor sentiment.
If you found this analysis helpful, please hit the like button, subscribe to our channel, and share this video with your friends. The content provided on this channel is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investment decisions should be made with independent due diligence and in consultation with a qualified professional. While we strive to ensure the accuracy of the information presented, we cannot guarantee its completeness or correctness. Any risks or losses resulting from the information on this channel are solely the responsibility of the individual. The views and opinions expressed in this video are those of the speakers and do not necessarily reflect the official policy or position of this channel. This content is not an offer or solicitation to buy or sell any financial instruments.